Good afternoon. In this video, we're going to go with this past week's trades and the weekly recap. Before I get into the video, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, last week I did finish with 13 wins and 3 losses for a win rate of 81.25%. Slightly below my weekly goal, but it was a pretty good week, so I can't complain. Friday I stumbled a little bit, but we'll cover that when we get to Friday. So Monday, I had 3 trades, 3 wins. Traded his room on what was Monday the 24th. SPY calls about 453.50, and where is Monday? Right here. Now I'm looking at for a bounce going into earnings week, and 453.50. Is that what he said? Yeah, which is right this high right here. Pre-market high, broke that. I probably should have taken it on the first 10-minute candle. I didn't. I just don't like taking the first 10-minute candle, because that is where you see a lot of whipsaw action, a lot of indecision, a lot of fake outs. And I just prefer just to wait out the 10 minutes. You can do what you want. You do not have to do what I do whatsoever. You can do whatever you want, trade whatever you want. I'm just sharing what I'm doing, how I'm doing things, and I have to adapt a lot. I mean, I do a lot of adapting. If you've been with me since day one, or at least year one of the room, I've had to do a lot of adjustments, a lot of adapting. Even in this year alone, I've made quite a few changes just this year alone to adapt to the market conditions and the fake outs and stuff like that. So the market is always changing, evolving. What works today is not going to work tomorrow. And what works tomorrow, could work for a long time and then all of a sudden just stop working. Because I used to use I still use the 20 EMA, 200 EMA. The EMA is for support and resistance. And I used to had no problem buying calls when it was dipping down to the EMAs, or if it was popping hard and rejecting the EMA, I'd just jump in puts right off the EMA. But lately, you can't do that. It's just the SPY will just rip right through the EMAs like nothing. Then months ago, where it's VWAP used to hold and be resistance and support. Now when it gets to VWAP, it just rages right through it, and it just, the market is always changing, and you just, what works now could not work tomorrow, next month, or months down the road. But then again, they could cycle back and start working again. There's just the more this goes on, the more I think the indicators are just useless, because the market's always changing, and to find that one indicator that's going to work every time, there's no one indicator that's going to work every time. It's just you can use indicators to use them as confirmation or to figure out the direction of the trade and stuff like that. But I just am realizing more and more that less is better. I mean, it's just, the market's just always changing, and I don't like taking the first 10 minutes out, so I wait for the first 10 minutes out. But even if you wait the first 10 minutes right here, they fake out right here. I mean, even if you waited the first 10 minutes right here and you grab calls at high day, which I do, it would have been a fake out right here. So this has been happening a lot. This whole year it happens a lot, but there was I don't know, a month or two ago where it was happening so much. It was happening two times in the first half an hour. Then I was sitting out the first half an hour, just because you could literally count the fake outs, where it would fake out once and it fake out twice, then it would actually end up making the real move. So it's kind of crazy that it was doing that. So even if I took calls right here, that would have been a fake out. I didn't take them. I'm not quite sure why I ignored that. Probably because of I think why I ignored it was the size of this opening candle, which is pretty substantial. I don't like going after big candles like that at open, so I hesitated. But when it came back down, it broke below lower day, which is 453.40. I decided to grab puts. I grabbed the 45 puts at 650, and they went from 650 to 1020. So that ended up being a really, really good move right there. Then I switched to calls at 1152, which is probably right here. Right here. No, 1152? I could have taken it right here. I definitely see why I like right here. Now, I know I like to talk about this all the time because this is very, very factual, is that it's easy to look at things after the fact than it is to do in real time. So I really get annoyed when I see people, these idiots on Twitter and StockTwits, all the FinTwits, when they show maps or charts and say, okay, you can take a trade here, you can take a trade there, you can take a trade here and take it there. It's so easy just to point out all the trades after the fact when it's all said and done. But when you're doing it in real time, you get a million things going through your mind, and you're trying to make the best decision you can based on what you have available and what you think is going to happen, because you don't know what's going to happen. But after it's all said and done, you can go back and look, oh yeah, this did work out. If I took it here, it would have worked out. But you can if and want all you want, and the fact is, doing it in real time is just a different animal than saying what you should have done. But yeah, I could see why I probably would have taken it here, but I'm not quite sure why I didn't take it here. You get the wicks right here, and it broke out. I could have taken it right there, and it makes sense that I would, but for some reason I didn't, and probably didn't like the way it looked. Then it came back down to VWAP, bounced back up. This is probably what I was. Let's see, it bounced here and here. I probably thought it was probably going to be a fake out. That's probably when and technically it was. But 1152, so I took it right here. So when it came down, the VWAP came quickly back up. This is probably where I thought, okay, it's going to actually go this time. And it's making support at VWAP. So I tested it here, here, and here. And so I was like, okay, it's going to test high a day, and it bounced off VWAP for the third time. So maybe we're actually going to break. So I took the chance, grabbed 45, 55 calls at 650. And they went from 650 to 840. So that did work out. Ended up being a fake out. And 20 EMA, it's this blue line. It's been holding. I held it there, and I held it here. But I took puts at 229, which is probably right here. No, 229. Right here somehow. I want to say I didn't take it up here, because there's been a couple times, I don't know if it was this past week or last week, where it starts to look like it's having a rounded top, and it doesn't. It just rips on you. So I just been waiting. So I think I actually initially waited for it to get under like right around the 450, 435 area, 30 area. I think I got it closer to down here, because you can see you get a pivot right here. You get resistance, then you get support, then you get resistance right here, then it pushed through, then it came back down right through it. So that was a level I more or less probably used to grab puts. So I grabbed the 45.60 puts at $4, and they went from $4 to $8.90. So that ended up being a nice little play right there. So that worked out good. That was a good day on Tuesday. I probably could have grabbed it right there, but I just wasn't sure. And when you're not sure, you don't feel obligated. See, this is the one thing you don't always have to trade. You get all these people that just throw a bunch of trades out there, and you just less is better. Be precision, be precise, snipe your trades, pick the ones that you like. You just gotta pick your battles, basically. I don't like being in trades all the time. I don't like having a bunch of trades. I'd rather just take a few trades per day and make them good than take so many trades and just I don't like that. All it takes is one or two good trades per day, and you're gonna end up doing well, especially in SPX. So I'm never a fan of trading a bunch of tickers. I've never been a fan of that. I've always got the same. I always play SPX, always. To me, I just love it. I know I used to play a bunch of other tickers, the other blue chip in the past, but I don't know. To me, you'll make more money playing SPX than you will anything else. And even if my other charts, I have only a handful of stocks up. I mean, I have Amazon, Microsoft, Meta, Apple, Netflix, BA, and Tesla, and VIX. That's it. That's all I have up. I don't really care about the rest, what's going on. I only watch them just to get an idea of what the rest of the market's doing and stuff like that, like what tech's doing, because basically tech runs pushes up SPY. So it's good to know where they are. And it's also good to know if tech's starting to look weak, and SPY will usually end up acting weak too. So, but anyways, the 25th, which was what, Tuesday, traded as room. SPY calls for 455, which is this previous high right here, kind of, yeah, rounded up. Previous high. Then you get pre-market high right here. Well, that's pre-market high right there, and you get this low right here. So to me, I thought that the 455 was a good number between this high, and right in here. So it was a good round number, and that's why I picked it. So then I didn't take anything. I should have taken calls right here. For some reason, I did not. First green candle, because what I usually do is if I'm looking at calls that open, and I mean, I will flip. I have no problem flipping. If I'm looking at calls and the first 10-minute candle is a green candle, is a red candle, and it looks like a very bearish red candle, then I will take puts on the new low day on the second 10-minute candle. But if I'm looking at calls and it's a strong green candle, I will take calls over the strong green candle high for new higher day for push. And I didn't. I don't know why I didn't take it here. I don't know why, because it fit the parameters what I would have done. I don't know why I didn't take it. But anyways, I did take calls at 10.10, which is probably right here. You can see you got the wick right here. It pulled back, went down to VWAP of the 20 EMA, came quickly back up. Once I think I took it when it was over 454.80, right over the body of these two candles. When it got over that, that's where I took the 45.60 calls at 760, and they went from 760 to 850, almost $1 move. So not too bad. Then it rejected, but yeah, it just chopped around this area right here. Then I took calls at what, 1045, which is right, 1045 right here. I took them right here. Yeah, because I got it here, then it quickly pulled back, and it dropped down to below VWAP and got quickly bought back up. So when it got above these body of these candles right here, these three candles, I'll blow it up so you can see it better. When I got over this, you can see the body here, but the body, not the wick, the bodies. And when I got over that, I took it. I took the 45.60 calls at 680 this time. It's dropped below VWAP, got bought back up, then it actually popped. So the calls went from what, 680 to 780. So $1 move. I'm not sure. Yeah, I think that that move was from, I think I bought it probably closer up here. Then you had the pullback, and then it actually went green right here on this candle because theta would have ate it right here. So yeah, it went from 680 to 780 right there. Then it just ripped. Then I took puts at 159, which is what, right here? No, 139, right here. Not quite sure why I would have taken it here. I mean, kind of risky. Is there something going on here? Let's see. What is the level of this area? This is 456. Is this the double top right here? Yeah, that's why I took it right here. The hourly double top right there. I do remember that now. The hourly double top is right here. I got a harsh rejection right here. Then they took out stops. Then when I took the puts right underneath the body of this candle, and close, yeah, right around the 496, I think I took it. Oh, actually, I think I took it in front of me more. I'm more precise about the numbers in the middle of the day, throughout the trading day, because you go based on the candles in the area. Like pre-market, I round up, But yeah, when I'm more precise about the number during the day, because if it's close to higher day, I'll try to get it before it breaks out. Or if it's a congestion of a bunch of candles, I'll use that specific number, which is what I did right here. Just a couple candles right here of 455.95, or even 455.90 might have been the, yeah 95, I think. And that's where I grabbed puts. I grabbed the 45.75 puts at $5, and they went from 5 to 6.30. So I get a little bit of a move. $1.30 doesn't seem much, but if you're trading if you're trading the Qs, I did the Qs in my challenge, the first part of my challenge, and they just don't move. And to get $1.30 out of the Qs, you need a massive move. You'd have to have a move like this in the Qs in order to get $1.30. But versus SPX, you just need a little tiny little fluctuation move like this. You can get $2 or $3 like it's nothing. But to get $1.30 out of the Qs, or even Apple, you need a massive move like this, and that I'm not interested in. That I'm not playing in Qs. I don't play slow movers. I like the fast movers because that's how you get paid. And if you're playing the Qs, you just, if the market's in a choppy, if it's very choppy and doesn't go anywhere, you're not going to do anything. You're going to basically fight for a nickel and dimes, and to me it's not worth it. I mean, if you're going to risk money to play, I mean, to me, I'd rather make dollars versus pennies. So I'm not interested in that. You can, I'm not. I took puts at 332, which is right here. You can see exactly why I took it here. Head and shoulders, you get the head, the left shoulder, the head, the right shoulder. When I got below the 455.80 area, or even say 75 area, that's where I grabbed puts. I grabbed the 45.75 puts at 420, and they went from 420 to $8. So they ended up doing pretty good. So worked out well. I do prefer the 10-minute candles over anything. So you can get a nice clear picture. You don't got any indicators up here, but I mean, you can use levels. I love these kind of setups right here, where it's these congestion of candles, because you can use the higher day of 455.60, or you can use puts under 455.30. I love seeing these. I love trading these because these make it easy, but sometimes they can fool you and trap you. So that's the only downside of those kind of candles. Then we have FOMC, which I didn't trade at all except the FOMC itself. And this was a very tricky FOMC. I think I definitely played this wrong. I probably could have played before FOMC, but I don't like doing that because of, if you take a couple plays and you take a couple losses, you're reluctant to play FOMC. And to me, I feel like FOMC is worth it more to play that than it is to try to squeeze out a couple good plays before FOMC, because you can make a whole day's worth of money on an FOMC play if you play it right. And I definitely don't want to take any losses before FOMC. So I always just take the morning off, just chill, and just, kick around the house or whatever like that. I don't think it's worth it to me to trade before FOMC. I usually wait till after. So what I did was I took, let's see. I took a FOMC strangle, SPX strangle. I took the 445 puts at 720, and I took the 45.70 calls at 640. I was actually kind of surprised. I was very, very surprised at how cheap SPX was with Powell. They weren't expecting a big move. So it started to drop. Usually the first move is usually the wrong one. So it popped. I mean, it dropped a little bit. It popped. So I was like, okay, I will sell the calls right here, because they have been hinting we're going to get raising rates, and the market hasn't really been taking it seriously. So it popped a little bit, and it did raise rates, and it popped a little bit right towards higher day. So I ended up selling the calls, and then it started to come back down. I thought, okay, here we go. This was move not one, this was move two. Then it just popped, and then I was just like, okay, yeah. So the calls went from 640 to 1350. They ended up being a good play, but I was not expecting the pop and then for it to like drop a little bit to lower day. It just stayed within the range and I just raged. Then it dropped. The puts started to come into it right down here. I think I remember because I got the puts around 720. They think the actual puts came in close to $4 or $5 down here, and I thought for sure we were gonna break because we were right here on, yeah, we were right here. What's it, 26, right? Yeah, right here. So I thought for sure if we broke below this 454 area, which we did, and we were going to really get a huge knife down to the 452s, and it just didn't. It got bought up right here, and it just took off. So that kind of like didn't work out well. So I wasn't quite sure what was going to happen. So I was just like, whatever. And I didn't really play. I only took that one play for the day. Usually I'm pretty active on FOMC, but just this FOMC has been very tricky the last couple of times. I wasn't sure what was going to happen. I thought for sure it was going to end up dumping once it got down to 450, under 454, and really going to 452 or something. But no, they came back in, kept it in its range. They bought it once it got outside the range, and it just took off. And I was just like, okay, I just had enough shenanigans for one day. And this is what's been happening. I've noticed that this has been happening quite a bit. On FOMC will pop or stay rangy, and then the next day will actually have its reaction. I don't know why. I didn't play Thursday the way I should have. And I know that because I was calling it in real time that I wasn't sure. But Thursday pre-market room, let's see. Let's see, trade ideas room. That's what I say. SPY puts under 458, which is right here, this low, because we had this massive run up and it didn't really do anything at first. I mean, it's kind of choppy, 2 inside candles right here, green candle. I'm definitely not buying it over higher day because VIX was very, very low this day. Let me just bring up VIX on this chart. Yeah, see, VIX was under 13, and I was not buying calls with VIX under 13. So I waited for the right time. I bought puts at 956 right here when I broke low at day, 4,600 puts. When, let's see, yeah, I bought 4,600 puts at 720. They went from 720 to 1370, so that ended up being a good play. Then I grabbed puts again at 1059, which is right here. Had a nice little bounce right here. Went up to the towards VWAP and 20 EMA. Rejected the 458.50 area. Came back down. I took puts right here under 457.70. And they went from 750 to 1030. When I got the 45.90 puts at 750, they went to 1030 right there. Then it bounced. I grabbed calls at 251. 241, which is right down here. But you know, I was looking at this right here. We had this big massive red candle right here, and I remember saying in the room, you can look in the room, the timestamp, I was waiting for a FU candle setup because you had this big red candle, which is basically half the range of the day, and it got bought right at lower day. So I was not too sure about buying puts right here, and it quickly got bought back up. So it dropped down to 457.20ish, and it got bought back up, bought 50% of the thing, came back up to the 20 EMA. It looked like it was about to make a green candle because I think it was like within the last 30 seconds or a minute, it was a green candle. And then it just dumped, and it dumped way too fast. It didn't, because I was looking for an FU setup. It didn't set up. Then it dropped. And then I was looking at right here. I just wasn't sure if it was going to drop more because it's already at a $4 range. And SPY hasn't had a big range in a long time. And I was like, okay, I wasn't gonna take calls here, but I was thinking, okay, maybe puts, and I wasn't sure, and I didn't. I kind of hesitated, and then it dumped. I should have taken it there. So yeah, I was looking for a setup here, and I wasn't sure about that right there, so I just stayed out. But I did take calls at 241, which was right here. 241. Why did I take it at 253? Let's go back to. Oh, what did I do to that? I hit. Okay, 253. 253. Okay, well, there. Yeah, I see why. Right in here, you can see on the hourly, right here, support. But I shouldn't have taken that there though, to be honest. I'm not quite sure why I took it here, 253. I mean, you get support right here on the hourly, but maybe the RSI was very low. I don't know, but somehow I jumped in this. I caught the knife at 453. Oh, I know why. I remember now. The max pain was 453 that day. I do remember now. Max pain was 453. And usually what happens is if the market opens up above max pain, the dips get bought. So in this case, max pain was 453. It dropped down to max pain. I got in right when it got below max pain or right at max pain, and I bought calls thinking it's going to get bought. They're not going to pay the puts. They're going to pay the calls, and that's the thing with open interest. We used to use it all the time to gauge where the market's going to go, but lately that doesn't matter because if this high open interest on the call side, they get paid. But I've noticed they don't like paying the put side. This whole year, I don't think they've hardly ever paid the put side high open interest on the market on SPY. So if it opens up above max pain, the dips usually get bought and it stays above it. If it opens below max pain and it pops, it usually sells off and stays under it. That's been the trend lately with max pain. So when it got to max pain, I bought calls. I jumped in. That's why I grabbed that. So I grabbed the 45.50 calls at 590, and they went from 590 to 690. They got a nice little dollar push on that. And then I took calls again at 314, which is right here. It dropped back down, flushing out the stops, came back up. Once it got over the 453.55 area, that's where I grabbed calls. I grabbed the 45.50 calls at 330, and then went from 330 to 470 on that. So I got a little bit of a play. Then it ended up dumping more, and it actually did go into max pains, which I was a little surprised about. So, and then Friday, Friday trade date is Romo Friday SPY puts on the 454. Which was right down here, kind of far, right down here, this low right down here, but it had a nice little run. It was kind of far. I wasn't quite sure, but you know, it got a red candle, and then it didn't really drop. It was more like a doji over the high. It went over to the pre-market high. So then I just took calls over high a day, which I did. I took the 45.80 calls at 590. And they went from 590 to 820 in that little push right there. Then I took puts at 1047, which is right here. And I can see why I did that. Started to get around top, broke high a day, rejected, came back up, rejected again. And that's when I was like, okay, right when it gets underneath this 456.20 area, I will grab it. I'll grab the 45.70 puts at 640. Actually, I think I grabbed it right here. Yeah, I think I grabbed it closer underneath 456.15. Well, either or. I grabbed it right here. And I grabbed it at 640, and it started to drop a little bit, then it popped. Then I ended up cutting the loss at 230 as it broke out, which ended up being a trap. This is what I'm talking about, these rounded tops. It looks all great, and it has a nice rounded top, and it's breaking below these areas right here, and it looks like it's going to dump, and he just gets bought. These are the things you got to be careful of, because they do look like they're going to break. You just get out too close. Plus VWAP was right there. I probably shouldn't have done that with VWAP right there, but I think I was looking at it from the point of view that if it gets under 256.15, it's underneath VWAP, that it will have some momentum and hopefully go low today. It didn't, got bought and it popped. I mean, I ended up stopping out right there. So that was a fake out trap right there I fell for. Then it took calls at 12:28, which is right here. I remember this. I don't know why I did this, but yeah, popped up, huge red candle, came back quickly. I was thinking, okay, maybe this thing will pop because it dropped and quickly came back. So I bought the 45.90 calls at 5:30. Then it didn't even break high today. I came back down. Then I averaged down right here at VWAP, thinking that we were going to bounce at VWAP. So I added more at 2:30, making my new average 380. Then it lost VWAP and I dumped it. And so yeah, I went from 380 to 150. I dumped it at 150. And the good thing I did because it dumped even more. Then I did grab calls at 221, which is right here. Pushed up the VWAP, nasty green candle right here, and then those calls I took ended up going green, I think. And yeah, I took 45.80 calls right here, pushed through VWAP, pulled back. Then once it broke above this 456.75 area, that's where I grabbed the calls. I grabbed the 45.80 calls at 490, and they went from 490 to $6 right there. So it did work out, but struggled on Friday. Made a couple bad decisions, one being right here and one being right here. I probably shouldn't have done that. I probably should have been a little more patient, taking puts right here or something if once it broke below this area, because I definitely could have seen me taking puts underneath that area right there, but I didn't. I was thinking it was going to stay up, it was going to get bought, and it just got flushed, so it didn't work out. It is what it is. So with that said, that's the recap. Hope this has helped. Hopefully next week will be a good week, and I'll be able to get some better trades in and good more trades in. So, but that's gonna do it. And thanks for watching.